If you own a business in Australia, you may need to pay income tax instalments during the year so you don't end up with one big tax bill at the end of the financial year. This tax system is called Pay-As-You-Go Instalments. Before we go any further, it's important to understand that Pay-As-You-Go Instalment tax is not the same as Pay-As-You-Go withholding tax. If you find this confusing due to their almost identical names, don't worry, you are far from alone. But let me assure you that Pay-As-You-Go Instalments and Pay-As-You-Go withholding are different taxes. If you want to find out more about Pay-As-You-Go withholding tax, or if you want to learn an easy way to tell the two taxes apart, check out our videos on those topics, which we have linked to in the description below. Okay, so let's start learning about Pay-As-You-Go installment tax. And we'll start with whether or not you actually need to pay these installments. Put simply, it is not up to you to decide whether or not you want to pay Pay-As-You-Go installments. Instead, the Australian Tax Office will make the decision for you, based on the last tax return you lodged with them. If the ATO decides that you must start making installments, they will write to you to inform you. If you want to read up on the rules the ATO uses to decide whether or not your business should start paying Pay-As-You-Go installments, go to the Australian Tax Office's website at ato.gov.au and type PAYG Instalments into the search box. Then, find their most up-to-date article in the search results and open it. The article should look something like this. Within the article, you should find the entry thresholds the ATO uses for individuals, trusts, companies, and super funds to assess whether or not they should start paying installments. So as you can see, there are different rules depending on the structure you use to run your business. If you operate as a sole trader, for example, the rules are different to if you ran your business as a company. Also, while the information displayed here is correct at the time of making this video, keep in mind that the rules and thresholds may change over time. So if you want to know the latest rules, go to the ATO's website and find the latest information contained in their articles, or seek professional advice from a tax accountant. Okay, now that you understand why the ATO may require you to pay these installments, you may be wondering how you actually make the payments. Well, once you are in the system, the ATO will notify you whenever an installment is due, and you usually make the payments via your business activity statements or PAYG installment notices. Then, at the end of the financial year, you will complete a tax return for your business. If you have not paid enough tax during the year through your installments, you may need to pay some more. If, however, you have paid too much tax during the year, you may receive a refund from the ATO. Now, of course, no one likes to pay more tax at the end of the year, so to help ensure this doesn't happen to you, it's a good idea to do some tax planning with your tax accountant. At various times during the year, your accountant can estimate your full year tax position. Depending on their calculations, you may choose to increase the amount you pay through your installments during the year. This is especially necessary if your business is doing well. With some careful tax planning, you may save yourself the pain of having to pay a lump sum to the ATO at the end of the financial year. So that's it for Pay-As-You-Go installment tax. Be sure to also check out our video on Pay-As-You-Go withholding tax and our video on how to tell the two taxes apart.